In this video, I'll discuss some of the major problems with Bitcoin and crypto in general, and we're starting right now. Hey guys, Elliot here. So a lot has been written and said about Bitcoin and all the other cryptocurrencies over the years. And whether you are a diehard crypto investor, a true believer in their use as a currency, or just a casual bystander, I can't fault you for being a little bit confused about the whole matter. Is crypto a real investment? Is it legit currency and the true future of money? Or is it just a fad that will eventually go away? I'll take a look at Bitcoin and all cryptocurrencies from a somewhat different point of view and try to make sense of the whole phenomena. Because when it comes to digital currency, there's definitely a big elephant in the room that we're just not talking about. So let's get into it, and as always, if you enjoyed this video and found it useful, please do consider subscribing to the channel. Helps me out a lot, and don't forget to smash that like button. When you talk about cryptocurrencies, it's really two separate conversations. The one that most people don't really discuss or hype up all that much is the blockchain technology that underpins numerous cryptos. Blockchain is on fairly solid technical footing, and the technology and all the variants of it, such as the Ethereum network, are constantly being improved without much fanfare, and new uses for blockchain are constantly being found well outside of the actual cryptocurrencies. That is, however, a topic for another day. Let's talk instead about the much more hyped topic of cryptocurrencies being used as actual money to buy and sell goods. And let's talk about the investing aspect of it that has seen the price of Bitcoin surge to $60,000 yet again, and yet again prompted calls that this is all a scam, just as a new crypto ETF appeared and the digital currency started to gain what at least seems to be some mainstream legitimacy. So what the heck is going on? Well, the first thing to discuss is that proverbial elephant in the room: investing in Bitcoin and its usage as an actual currency. And yes, these two are very much inversely related in ways that many people don't quite realize. First, let's state the not so obvious fact that you're not really investing when you buy into Bitcoin or any of the other thousands of cryptocurrencies that are out there. You are, by every possible metric, simply speculating. The perceived value of Bitcoin is not tied to any sort of manufactured product or service, and Bitcoin doesn't issue stock or pay dividends. Its value is going up purely because people are throwing money into a big pot, and as a result, your fractional share of it becomes more valuable. As soon as a large amount of people decide to sell off their holdings, your shares will immediately drop in value as the money you put in literally leaves your hands and goes into someone else's. So it's pure casino level speculating, where the value of something is completely a function of how much money is being thrown at the asset, and not any intrinsic worth. Now you may say, isn't that really how all stocks work? And isn't Wall Street all speculation and gambling anyway? Well, on some occasions it may seem that way, such as when a stock gets hyped up, but for the vast majority of stocks, no, that's not really the case. While the value of anything is certainly subjective, most stock values are based on the tangible worth of a company and its products or services. Apple is worth what it's worth because its projected earnings from selling tangible and popular products are real, and their shares will hold their value whether 1 million people purchase the stock or just a few thousand. You can easily see this if the amount of outstanding Apple shares gets suddenly cut in half by, let's say, a massive buyback. The remaining shares will then be worth twice as much because the company has intrinsic value. By comparison, if half of all Bitcoin investors sell their shares, the remaining Bitcoin value would be cut in half and stay there until more investors jumped in, because Bitcoin has no intrinsic value, only the cash that is being pumped into the asset. Now you may say, I'm investing in an asset that I believe will one day be used as a major new type of currency. Well, here's where things get really interesting. See, on the surface, this all seems great. You are an early investor in something that may one day be huge. After all, isn't this why you invest in up-and-coming companies? Because you think they may turn into another Apple. However, Bitcoin is not a company, and again, you are not investing. In fact, the very process of throwing money at Bitcoin prevents it from being adopted for wide use as a currency, and relegates it further to being just a vehicle for wild speculation. Why is this so? Well, to answer that, let's take a look at the US dollar or the European euro. What do they have that Bitcoin doesn't? Many factors, it turns out, but the most important among these is the fact that dollars and euros are stable and don't fluctuate much from day to day or week to week, while Bitcoin and the other cryptos are a bit of a wild roller coaster ride on most days. You simply cannot use a currency that fluctuates so much in value, as it makes pricing and day-to-day transactions nearly impossible. So it's a bit of the proverbial chicken and egg here. People quote-unquote invest in Bitcoin because they believe it's the wave of the future, but this wave can't really come because all the money being sunk into Bitcoin is the cause of all this instability. This instability is the direct result of savvy investors buying low and selling high, thus making profits and fueling the up and down cycles of cryptocurrency even further. And in the end, that is the inconvenient truth of Bitcoin and crypto. Okay, so what do we do here? Well, if you're in a small minority of purists who believe in the future of digital currency, the best you can do is not buy and sell Bitcoin and hope for wider adoption and government regulation. Wait, what? Regulation? Aren't any central controls very much against the premise of Bitcoin? That is true, but more and more people are starting to realize that regulation is in fact the much needed solution to stabilize Bitcoin and all cryptocurrencies, as they are simply not usable on a mass scale while being targets of wild speculation. The various controls offered by government regulation may actually be the only way to bring crypto back down to earth and stabilize it as a medium of exchange. However, this is not looking all that likely, at least not without changing the fundamental nature of Bitcoin and the other cryptos, which were, as I just mentioned a minute ago, were developed precisely to bypass any central bank or central authority. If you want an analogy that really highlights the problem here, think of Bitcoin and all the other cryptocurrencies as a large group of misfits who all abandoned living in the city and formed a biker gang out in the countryside. There they can avoid the rules and the oppressive authority of big city living. But then the biker gang members started squabbling among themselves and couldn't quite police their own members, and leadership had to appeal to the authorities of the big city to help govern them. Well, of course, to accept the help, the biker gang would have to be fundamentally changed, and pretty soon all the misfits found themselves being governed again and back in the city living under all those rules. That, in essence, is the Bitcoin conundrum for all the futurists that envision a world utopia with no central banks, no authorities, and digital currencies flowing freely and anonymously in a true financial nirvana. Sure, maybe one day, but right now, Bitcoin, like most major cryptocurrencies, is about as stable as a sand dune in a hurricane, and the waves of predicted crypto adoptions, while certainly encouraging, just haven't come in yet in quite the numbers needed to call it mass adoption. Okay, so that last part, as I said, was directed at a small minority of purists. What about the much larger majority of speculators who just want to get rich off of crypto? I know I'm very likely talking about you, the person watching this video, so pay careful attention because the hands-on part of the video is coming up. First of all, as I mentioned at the top of the video, don't call it investing, call it what it is, speculating on price. Realize you're just doing this to make a buck and act accordingly. And in that regard, the most important thing you can do is buy the dip and sell the peak. Now, if you're a long-time investor, this is of course true for any active trading of stocks. You buy when it's low and you sell when it's high. And it's no different for crypto, except now you're dealing with an even more volatile asset. Here you not only have to watch the market carefully and read the news, but also keep an eye out for celebrity tweets. I generally buy Bitcoin when I see it stabilize at a fixed price for about a week or so. The much harder guess comes when you're deciding to sell, as you just don't know where the currency will peak out. But the general advice is to not get too greedy and sell when you feel like you can make a healthy profit and you see some stability in the price. If you're skittish, then just sell a small portion of your portfolio, selling more as the price climbs. In the world of stocks, there's generally a futile effort to time stock highs and lows, and it's no different with cryptocurrencies. The best advice is to treat crypto as an asset to be bought and sold, look at trading as a business, which means don't get attached to holding the asset, and follow the price carefully, buying and selling decisively. You don't need to be right all the time, you just need to be right often enough to pull in a profit. Let me know in the comments below as to your own experience with buying and selling crypto in recent year or two. Alright, if you enjoyed this video and found it useful, please do consider subscribing to the channel and turn on notifications so you don't miss any of the upcoming investing and finance videos just like this one. Thanks for watching, and I'll see you all soon.